Hi guys, so now we've been through a few different simple basic stuff on the Forex in the beginners section of the Discord channel. Now we're going to move on a little bit more on the trading view and obviously your setting trades and what are the different order types. And I'm going to go over these and explain these a little bit more in detail for you. So we're just going to head over to the screen. If you just bear with me, just share my screen there. Just make this a little bit bigger. Get my handsome face a little bit wider there. Right, so on the top here, we've got order types. Now I want to talk through the different order types we have. We've got, let's take a look. We've got a market execution. Okay, let's just make that like that. And we have a buy limit. We have a sell limit. And then on the other side, we have sell stop. And we also have a buy stop. Okay. Now we're going to go over these different order types. Okay, and we'll start with the very first one, which is a market execution. A market execution is simply wherever you are in the market at any given time. Okay, let's just get these down here. So the market execution is going to be when you execute a trade at any given time, live, instant, bang. And from there, it can be something as easy as when you do your analysis, things like this, and you can see well, when this comes up into this area, we're going to get in on the trade and things like that with regard to the trends and anything else, depending on your strategy and things like that. If you are on the charts like this, as I am now, and you want to go in for a market execution, whether you are activating a sell order or whether you are activating a buy order instantaneously, that becomes what we call a market execution. It's being executed at that given time. That is the easiest one to explain at the moment. Okay, so we're just going to put that on there, and we will just put a nice little tick on there to say we've gone through that. So again, that could be something as simple as I've got a sell order done. That's a market execution. Or if you went for a buy straight away for there, you could just click buy. That's a market execution. Okay. So that's your market execution explained. Now, what we're going to do, we'll go over the buy limit. Okay. Well, in fact, we'll go over sell limit for now. Okay. So let's just sort of get further in the nuts and bolts with this. So now we're going to talk about a sell limit. So a sell limit is basically the preference of selling, right? So the limit, when it becomes a limit order, it's when you are going to get in at the price that's best for you to sell. Now, when you're going for a sell, obviously the price you are expecting to move down. Okay, let's get the fire wand out. So on a sell limit, you are expecting the price to move down from a particular area. Okay, so if we look to the left here, we can see this is where price currently resides. Okay, so price is live right there at this moment. Now, you could not, if you wanted to do a sell order, your sell order is going to have to be above that area of price. Anywhere above that price level, you could set a sell limit, because you are technically waiting for price to move up, okay, above its current level and hit a particular area, whether it's an order block or a support or resistance. So let's say you are looking from a high point. Okay, I'm just going to sort of highlight this out. If you are looking from that being a swing high and that being a swing low, you are in a range in this area. Okay, so let's say you were expecting prices here at the moment. If you were expecting price to come back up to this particular area, okay, you could then set a sell limit. Now, a sell limit will not become active. Okay, it's not a market execution. A sell limit and the order that you are going to execute does not become active until your candle starts to fluctuate and until the candle basically moves up on a buy-in and it hits that. As soon as your candle comes up and it hits that area of point of interest for your sell limit, this is when it will become active. Okay, so once your next candle comes into play, you are expecting the selling area to come down, okay, and possibly target the areas of maybe the previous sort of low area as a target. Okay, so that is your sell limit. We'll go over that one more time. Again, we are identifying where price currently resides in the market, which is here. Okay, you are favoring a possible sell limit. A sell limit, again, we have to put above the current price. And when I say above the current price, you are technically waiting for an area of importance to where you think there's going to be a resistance area. And when price is slowly moving up and down from here, if it goes to, let's say, this level here and then goes to the next candle and continues down, it just means your order has not been executed. Okay, however, if your price continues to come up and it hits this area, it then becomes an active trade. Now, when it becomes active, obviously it could continue to go up, and when you go up into this sort of area, your sell limit, even though it is being activated, you would then start to become on this area here into what is known as drawdown. Okay, drawdown being you will be in a certain amount of loss from that executed trade. Okay, and you would have to have parameters where if you've got a short position set, okay, once the prices come up to activate into this, you would have to predetermine where you want your stop loss. So you might have it to this previous high and your target might be down to here, and then it gives you a risk to reward ratio. Okay, so that is your sell limit. Right, let's just scale this in. So we've done the market execution, we've done sell limit. We now are going to do a buy limit. Now, it's basically a mirror image. So whatever you have got, okay, on the sell limit, you are basically looking the opposite. Okay, so sell limit and buy limits are the same, it's just they're going to move in an opposite direction. So let's again just get in on the action here. As you can see, we look at where current price is. Okay, and price is currently residing, again, it's right on here. Now, if you were wanting to set a buy limit, which would be possibly executed on this lower area. Okay, we would be waiting for price to basically push itself from where it currently is, wait for it to do what it needs to do, and again, it would not become active until it completely hits this area. Okay, when it hits this area, your buy limit becomes active. You are then anticipating that the next move or the next candle, or maybe the same candle, to come up to start to target these sort of areas here of liquidity, which are your sort of lower high areas. Okay, so again, the buy limit is the opposite to the sell limit. It's just going to move in the opposite direction. And again, if your price was to move down through the buy limit, okay, you are then in what you'll be called again in drawdown. Okay, and the drawdown would stay there until it, if you have a stop loss set to say here, your candle might waver about on here and come towards your stop loss. However, if we get a candle that starts pushing back up, you have been protected by your stop loss area, and then it heads back up to either go to your TP area, or if the candle that you are getting in on this buy limit comes down and hits your sort of SL or stop loss, as we call it, which is that is your long area, and say that is your stop loss. Okay, again, you would not be considered a loss on your trade until you officially crash through this area. So again, we've identified where price is. A buy limit is where price will sort of come down, wave up, and does not become active until it bounces off your area of importance to then do a continuation in trend to the upside. Okay, so that is your buy limit. Just clear some of this off. So that's a buy limit. Just want to get some of this down here. So now all we have left is a buy stop and a sell stop. Okay, right. So with these order types here, well, we will go for a sell stop for now, right? So again, let's just move the two candles. Now, if you can imagine the buy limit, we've just explained, if price comes down to hit an area of support in this instance, on the buy limit, you were technically waiting for the bounce off the rejection area to go to your high side. Okay, that was your buy limit. Now, this is the opposite for a buy stop. Okay, we are anticipating price. You would be anticipating price from where it's at, okay, which is here. We've identified where price is. A sell stop is when price crashes through an area of where we're anticipating it to continue on its trend, if that makes sense. So let's say this is a liquidity area. Price is here. We are anticipating price to continue down, okay, from this area. And this is our area. This line here is our area where we would have our sell stop. Now, the sell stop, again, will only become active once price crashes through this area. Okay, now when it crashes through this area, price becomes active, and we will be targeting further lows on the downside. So again, if this is your TP area, you've got a short position and you are putting a sell stop order in, you are having your, let's say you're having your stop loss to this area. This would only become active on this candle on a sell stop order let's get rid of this on this sell stop here. your sell stop will only become active once this current price comes through this level, okay? If it was to come to here and then continue to the upside, okay, it would not become an active trade. It has to physically push through that barrier, okay, and continue to the downside and push through, okay, to maybe your TP area. And that is a sell stop. That's a sell stop. It's a continuation of price in the direction that you are anticipating. So the sell stop, it's a continuation of price to the downside. Let's take a look on the buy stop. So the buy stop, let's put that the tick on here. The buy stop is obviously, again, it's just very similar. It's just the opposite mirrored effect to what you are anticipating from that sell stop. So we just get rid of that candle. We'll get our green candle in. We've got our price. We're anticipating where price is at the moment. We're currently live right here. If we get a pullback on price and price continues up through this area, okay, and we put a market pending order for a buy stop, again, price will not become active on that order until you get a continuation through that level of what you're anticipating, okay, which is this here, through that being your entry level. So that's where you've got your entry level. If price was to pull back and hit this area and continue to the upside, that is your buy stop activated, okay? And that's basically it. I'm going to draw a little bit or a few more things out for you. That's your market execution, your sell limit, your buy limit, your sell stop and your buy stop, okay? So again, let's see if I can draw this out a little bit easier for you as well. So if we go on to so price is residing here, we've got to push up, we come down, okay? So this is where price currently is. Okay, so let's say we are anticipating a move to that level there, but we are targeting profits down here. This would become a sell limit order. We are anticipating price to come to this level. We would make a pending order and it would be called a sell limit. We would wait for price to come up from where it currently is. As soon as it hits that area, we would then be in on the order to then do the continuation down. That would be our sell limit order. Okay, so that's a sell limit order. Same with the buy limit. So now we're going to do the buy limit, just to show you. Price is coming down, okay? As prices come down, we've created this low. We've come on a pullback, and then we're starting to pull back down, okay? So we've identified structurally where price is, okay? So we are wanting to place a pending order. This pending order we are wanting to do, going on our analysis and strategy, we are looking for your buy limit. And the buy limit is basically, we have done our analysis, as I say. We are looking at that being our area of entry. Once we get price come down, okay, once we get the price come down and it activates off that entry point, we are then in on the trade. And as it's a rejection from that area, whether it's on the low side to continue up, this will be our buy limit order. And it's again on the sell limit. We are waiting for a rejection on the high side, the ceiling. When we get the rejection off our entry point, Again, it does not become active until it officially comes up to meet our conditions. So then we are looking for that reversal back down. Okay. Now, again, for your sell stop and buy stop, let's say we've had price come down. Okay, we've had a little bit of movement in the price. We are looking for a sell stop. So let's say we are seeing we are currently in a little bit of a downtrend. Okay, we have identified the markets. We are in a little bit of downtrend. It's rejected a couple of times up here. Okay, we are anticipating an entry of being on the lower side. Okay, so when this price comes down and it meets our parameters and our conditions set, once it comes through this area and price breaks through that barrier, okay, your sell stop has become activated, right? That's your sell stop. Price will continue to go down. Again, from that aspect, if price was then to reverse back up through your entry area, okay, it just means you're in drawdown. You might be anticipating a lower low to be met along here. Okay, and again, you may get a pullback, which on a sell stop, you might get a pullback that comes above where your market conditions were for your entry, but then you'll get the initial drive back down if you were to go in profit. Okay, and the same again if we were looking at the buy stops. Okay, we've identified the trend, okay, where it's been rejecting a couple of times off here. We've got our high, a higher high. Okay, that is where the liquidity resides, on the higher high. Your current price is residing right here, let's just say, and you are anticipating a breakthrough that structure of price. That there would then become your area of interest for an entry if you were looking at doing that sort of execution on your trade. That is then becoming your buy stop. And again, what would happen is when you do these sort of trades, there is every chance you could get a pullback through into your stop loss, okay, or into your area of eating into your area of stop loss, but then you might get a further drive further up, which will then hit your TP targets. Okay, so that is basically your sell limit, your buy limit, your sell stop, and your market execution all rolled into one. So what I'll do is I'll put some diagrams into the Discord a bit further down. If you're watching this on YouTube and you want to get access to the Discord channel, you just need to drop a message below on the YouTube. We'll get you sorted with that. And there'll be a bit more in depth as we go down on how you can do these on a more intermediate and advanced level based upon pattern and structures within the markets, okay, and what order types you would need to do to get in on those trades. Okay, but that'll be further down in the unit section on the Discord, guys. Thank you very much. Again, if you are watching this on YouTube, don't forget to hit the like button. Let me know how you're finding things. Hit the notification bell and subscribe as well, please. Thank you very much.